It almost seems worse in terms of the uncertainty over companies and their ability to make decisions in the markets to digest what this means for forecasts.
Yeah, I think that's right. I was surprised the market sort of hung in there as well as it did. At one point last night, the S&P futures was up, I think, over 80 handles. Some of it on NVIDIA, absolutely. Most of it on the back of that court ruling. And then at one point we went negative today, seemingly discounting what we're just talking about. Closed up on the day, so maybe it's just an NVIDIA day. But to your point, I think what this just does is adds another level of uncertainty to an already uncertain environment.
Yeah, and, the one thing I just say is, like, the reaction to that taco trade thing, it kind of probably emboldens him a little bit, right? So you have this back and forth between the market kind of calling you out on some narrative. And, listen, the narrative didn't need an acronym. This is something that a lot of market participants were talking about. The timing of the rollbacks, right, after the threat was something like take it to the bank. Didn't they happen like a handful of times on, like, Sunday nights and this sort of thing? And so they were really focused on the stock market. But when this president is challenged like that, he usually kind of doubles down, at least if we're looking at the playbook from the first administration and like. So this is something that I think is going to stay pretty volatile if you have the courts going back and forth and you have him and his administration. We just heard Navarro. They're going to find ways to get around it one way or another. And I think to your point about corporates, we keep hearing this. We saw Best Buy today. We've seen some other retailers talk about this. They're not taking big whacks at their guidance, but they're signaling to some degree that this is going to continue until they have more clarity.
So we always think about the market hates uncertainty above all else, even above bad news. Bad news with some certainty around it, I think the market can digest, maybe reevaluate, and then move forward. This, as you're saying, this level of uncertainty to me seems ratcheted up materially, at least for the next, I don't know, couple of weeks or longer. So I was sort of surprised, I guess, to your point, NVIDIA for sure, that's helpful. But because what do you do? Why are all negotiations, are they going to continue right now? Or what would you do? If you're the EU,
right.
Do you wait and see?
Or
Let's just see how it goes.
What's the worst case scenario? You do Section 122, you get 15% for 5 months or however long, 150 days. How bad is that? I mean, it changes the dynamics completely in terms of the need to come to a deal, I would say.
I just thought today was such a strange day. We have a negative GDP print on top of that. We had a great 7-year auction in the one place where we're kind of concerned. We reinstated the delayed tariffs. I mean, like, the whole thing is so wild. And yet markets, it's almost as if markets don't seem to care about tariffs. In fact, Guy says this all the time. I totally agree with him. Market cares a lot more about the debt market. But we walked into today with markets that had rallied back from Independence Day. We had the tariffs, pulled back. We had a court ruling. We've had the forestallment of that. I mean, like, ultimately, again, the market has told you we don't care so much about tariffs. But, of course, then we had a handful of GDP of data prints today, including GDP, where really, look, the trade data in the GDP number was worse than expected. We have initial claims, which are a leading indicator for unemployment, which were, higher again this week. You had pending home sales of existing homes that are their worst number in 2.5 years. So no, the markets are saying, I don't care about tariffs. And today was kind of that weird day where tariffs don't exist anymore, but maybe they might. But the market's back to where it was. But the data, the sentiment, the dynamics, and I think this is what you're all talking about in terms of uncertainty, tell you that there has been an impact. And we'll see where we go.
And the data, I mean, I would think that it would be even more cloudy in that, with this window, it enables companies to bring in inventory right now in this small window where tariffs are sort of,
right. No one knows what they are. Personal consumption also was a big miss today. But, I mean, maybe that was, if you think it was going on during April, that was a very...
So it's dismissed, sort of.
Kind of, I guess. I mean, there was a volatile time with sentiment really taking a hit.
Yeah, I'll just say this on the earnings front. We're getting, obviously, late in the season or earnings season, you get a lot of these retailers. And so that, commentary is a lot different than when we started earnings season with the banks, and it seems like we came out of that week or so where a lot of these banks weren't talking about a weak consumer. And, then we got into the meat of some of these other, in tech. I think generally they were better than most people expected. And a lot of that had to do with the sentiment. When you have this sort of volatility that we had in almost every risk asset, in April, you kind of get a little bit, I don't know what you call it, but like you're off sides a little bit. And then when you start hearing things where expectations are not that high, you end up feeling a lot better. I think we're on a little bit of a high where we just didn't have enough guide downs to make people feel like that we're going into a very rocky period until we get to some of these deadlines, whether it's the 90 days after China and the like. So again, I think that sets up for disappointment now. It's like back then we were discounting some worst case scenarios. Now we're just discounting the fade, and Tim says this all the time, the pain trade feels higher, but sometimes when that's the feeling, you don't often get it that way.